Yeah, just put that on recording. Shit, cut that out.
Alright. So this, realistically, what we want to do is we're going to go over all assets. Because what I figured out how to do is implement the way that I trade FX and utilize it the same with futures and options, okay? And I don't just come up with these things. I told you last week I'm going to backtest, right? So I backtested, right? And I wanted to make sure that the risk to reward ratio would come out the correct amount per percentage, which it did, okay? So what I'm going to go over today, what's pretty cool is because, you got different schools of thought on all this. Basically, at the end, me and Eric usually come to the same conclusions on things, right? We just maybe might get there a different way, or it might be a little bit different. What I'm going to say, though, is what I'm doing right now, if you truly want to be a set it and forget it person, like, this is it. Like, it's taken me like 8-9 years to really master this, like, not worrying about the news, not worrying, like, oh, shoot, there's something at 2 a.m. with Australia talking, I gotta watch, like, I don't care. I didn't care that I got stopped out this morning on pound dollar. I had 110 pip stop loss and I was 70 pips in the green. You don't see moves like that. It's okay, it's part of doing business. I would not, even if I remembered, I just finished running when I looked at it and it was like stopped out. Even if I remembered that they were doing non-farms, I still wouldn't have pulled the trade off. I'm not making adjustments anymore. And the only time I will manage the trade a little bit is if I'm close to getting filled and like the Fed's coming out and I'm not in the trade yet. Then I would cancel the trade and then I would just I want to make the trade. But let's talk about yesterday, and then basically let's go over the strategy. And I'll explain to you how I do it for FX, and then I'll explain to you how I do it for futures and options. All right. So number one is I always start with the macro view. So let's look at the macro view. Okay. Everything on Wednesday that I said was going to happen, what did it do? It happened. I nailed that to a T. I was gonna brag in the chat room, but I didn't. It happened to a T. They raised interest rates at what they said. He came out kind of harsh. And he opened up more than we thought he was gonna. They pushed it. They prided him a little bit. So that was beautiful, right? And that's what we were looking for. Bullish market, bearish dollar, right? We're getting our answers. We're getting our direction on this stuff, right? I'm going to tell you something. Don't let these non-farm payrolls throw you for a loop. My sentiment has not changed one bit. Not one bit, okay? I want to see inflation come up, this and that, because you got to remember, when you get economic reports like that, that's from the month prior and the month prior. I can almost guarantee, I can't guarantee it, but I can almost bet, all right, that next month the non-farm payrolls will be as expected or below. I can almost bet. This is what happens. These kind of things happen, and then, you get all these sudden movements, and people are like, oh, I thought we were on a turn and we were going up, and then it was going up. Dude, there's been too many. You can't get caught up in one event. Go back and look at all the red folders on Forex Factory Calendar. Go look at it the last month or 2 months. Go look at inflation, jobs, all this stuff. It's all been underachieved, right? It's all been slower, meaning the economy's slowing down. We're heading into recession, but the market's going up. So and the dollar's getting weaker. I'm not letting today take me for a loop by any means. I could care less, okay? Because I can tell you this right now. People are more concerned about inflation than jobs, all right? Now, if the inflation reading is high this month or next time it comes up, okay, then we might have to start looking at it again. But the S&P, right, if we go to the S&P, right, basically the dictator, when I give you overall market sentiment, I go monthly, weekly, daily. So on the Dixie, you've got a downtrend on the weekly. Okay, so you have a full bear market on the US dollar right now. Full bear, you got a full bear market on the USD. 100%. It's a full bear. That is a bearish trade as we speak right now, okay? You go to the S&P. All right? me and Eric were talking about this. I think it's like what, some percentage off from saying it's in a full bull market or something right now. My personal opinion, the fact that it broke that right there, I'm in. I don't need it to break this or this and that. I've got my start of my upward trend. I'm not going to let this throw me for a loop. Now, let's say this closes really low. All right. Actually, you know what? I take that back. I'm not concerned. If it comes back down to here, then it's a different story. All right. Yeah. I don't even. I'll be honest with you, Mike. If it breaks that low, that's even worse. If it even starts coming back, right? Even if it gets down kind of right here, like that won't be a good sign. So the next couple of weeks are important. But you know, if there's just a little hiccup right here, because you got supply and resistance that's strong over here, right? It's gonna, you know, next week it surpasses that, right? We're good. So me, from my analysis, right, and this is why I try to give you macro views. Because if I have a macro view, how much easier is my trading?
So much easier.
I got a direction. So I'm bullish on the market, I'm bearish on the US dollar, and if for currency it's important to say, because this one's important, I am bullish on the Japanese yen. And it doesn't take an Einstein to see that. The yen is gaining strength right now. And I'm still bearish on oil until otherwise. All right? That's just chart reading. Now, y'all know me for the most part as a trend trader. And I usually am. And I'm more conservative and I don't place as many trades, you know, like he does, because he's in and out, counter trend, this and that. What I've decided to do is go back old school core strategy and change up my rules that I will take counter trends. And the reason why, I was just telling Marcia, the reason why I'm going to do it is because I know I can hit a 2-to-1 on them. That's why. I'm confident with a 2-to-1. Remember last year when we were killing it with the US dollar, right? We weren't going for 2-to-1s. I was like, add on, double up, double up, double up, double up. Now, even if I'm with the trend, I told you, my whole scheme, my whole strategy is I want a 2-to-1. Now, I want this because I don't want to be active on this. That's why I'm doing this. I've configured a way that I've back-tested this enough, that I've done this long enough, that I know from the zones that I pick from on a higher time frame and how I scale down, I will get a 2-to-1 more than 50% of the time, which is money in the bank, all right? I think since I've started this, after these couple stop outs, I'm at like 62% right now or something like that, all right? You do the math. 62% on a 2-to-1 risk to reward ratio.
That's fantastic.
It's great. It's fantastic. Yeah. And honestly, Tony, I think I can get it up to 75. But I shot it low. I was like, let's see if I can get 50. Like, because I think it's 34% break even on that risk to reward ratio, right? So, but the whole reason I'm doing this, Tony, is because I don't want to mess with this. And I don't want the anxiety of having, you know, to wake up and look at this and look at that. Like, it's true set it and forget. So I've figured out a way to swing trade futures. Like, I'm not moving stuff. Now, for y'all, like, he pulled some money off today. I'm not against it. If y'all still want to do that 1-to-1 and this and that, I'm not going to tell you not to do it. Because it made me a lot of money, and it's gonna build consistency and give you confidence. So you do what works for you. As you progress in trading, right? When trading is really a big part of your life, which for everybody in here, it already is, or it's becoming a big part of your life. You have to evolve it around your whole life situation, okay? And that's like work-life balance, trade-life balance, okay? Right? I've made my money. I can make more. I can always make more. But at the same time, I'm realistic. All right? You ain't going to make $100 million off trading and investing as an individual trader. Not going to happen. Not in your lifetime. The percentages are just not there. Could I make 10, 15, 20? Yeah. But if I want to be a $100 millionaire or $200 millionaire, which I do, you got to be like a CEO of a company like this, like an A.L. Shahar or something like that. And I do strive to do things like that. But that's why I had an epiphany when I just went to cash, which was a little over $3 million, and I was like, dude, you made it. Like, you ain't catching up anymore. I moved my money to the checking account, put enough money in Thinkorswim, put enough money back in Owanda, and I got a lot of money just sitting and checking right now, and there's things that I want to do with it, all right? Basically, what I want to continue to do, though, from this standpoint, is make my trading and investing as simple as I can. And that's what I'm going to do right now, all right? So, the strategy, the concepts, the rules are all the same. None of this is going to be new to you. I've changed up a couple things. Are there little nuances in each market that are a little different for each one? Yeah, of course there are, and I'm going to go over, all right? So, let's start with, what are we in? And Owanda doesn't come up, so we're just going to do it all from here. What are we, Aussie CAD, Earl?
Yep.
All right, Aussie CAD. Here we go. We're in this trade. Earl, give me the, just go to my thing and at least just give me, because the trade's not up here. Give me the entry, the stop, and the target.
Alrighty, so entry is at 0.9335, and it's a 100 pip target.
It's a 50 pip stop loss?
Yep.
That was the right one. 93. Actually, let me just get 3 of them.
The target would be 9.943.
90 hula. 93.35.
Wow, I got it as 9.
What's the entry?
0.9335.
Yeah, okay. So if the stop loss is 50, it's 92.85. That would be 50 pips. Is that what I did?
Yeah.
I don't feel like I would have done that.
So,
Okay, let's run through the progressions, all right? Let's just run through this whole trade setup. Now, barring all this, I still want to realize that I still wait, and I'm giving you my whole plan of the day, my whole routine. I got to get my, because I'm running every morning now on top of boxing, I got to get this in accordance, but I'm usually at the computer at 8 a.m. That is like a lock. That's when I start. The reason for that is when the FX Live report comes out, I've got my Bloomberg 5 things, I read all that super fast, I get an idea. I always told you I look at the Dixie, I look at the S&P, and I'm off and running. Then I start looking at my trades, okay? It doesn't take me any more than a half hour. That's because I've been doing it a while, all right? It used to take me longer. I do the same thing around 5 o'clock or 6 o'clock, all right? I read the Bloomberg close, I read the North American close, I look at any opportunities that I could take for the night, and then I'm done. That's it. That's my routine. And I can do that in about a half hour sitting in each one, all right? That's how I operate, around the clock, all right? And at this point, this is what I'm getting at. I'm not managing trades anymore. I'm done. Either get stopped out or I hit my target. That's it. Now, for me, it's great because this is what's great. This is why I feel good about this, and this is what's good, and this is important. I'm not making the most money I've ever made in this business right now, as we speak, but I'm the most disciplined I've ever been. I'm so disciplined right now. It's shocking, because y'all know me, and y'all have gone with me. I was disciplined enough, but I'm a gunslinger. Man, I don't give a fuck. Let's go. Double down. Boom, 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 boom. All right? And that's how I doubled up my accounts and did stuff like that. And beautiful. That stuff worked, right? But I'm at the point in my life where I don't want to do that anymore. I don't want to having, nerves waking up at 2 a.m. and be like, oh, shit, what happened? You know what I mean? Like, I wish I didn't do that. I can do that with my sports betting now, all right? And I can wake up and be pissed off that Giannis scored 50 points, but he couldn't cover a 4.5 point spread, right? Something along those lines. So what I want to do here is just go over the rules. So basically, staying on top of the economics, always staying on top of the macro, right? But more or less avoid the news, all right? So now this changes, okay? So let's set up the curve, make sure the curve's right. All right, so basically let's just start this. I'm just gonna move everything, condense everything. All right, current price is right here. Look up and to the left. You see that line right there? I'm telling you how I do it now, okay? This is the same as core strategy, it's just a little bit different, same concept. All right, so my distal on my supply line is right there. I'm done. Then I look for a distal on demand, and I'm gonna have to go here, okay? And I'm done. My curve is set. All right. Now, next, after I go to my weekly and I assess my trend, I now have my parameters. Correct? All right. What kind of trend do I have? I have an upward trend. All right. So now let's go over the rules. This is where they've changed a little bit. You ready? If you're in the middle of the curve, which we are, all right, the green is the middle. I use a 25%, 25%, 50% ratio. If you're in the middle of the curve and you have an upwards trend, you're doing what? You're buying, right? You're going long. So obviously that's what we're doing in this trade. If you're in the middle of the curve and you have a downwards trend, what are you doing? You're selling. If you have a sideways trend, you're doing nothing. That's a no trade, okay? That stayed the same. This is where I switched up a little bit. If you're low in the curve and you have an upwards trend, you're buying, right? If you're low in the curve and you have a sideways trend, I'm okay with you buying still, right? If you're low in the curve and have a downwards trend, I'm switching it now.
Oh.
I'm buying.
Oh, jeez.
That's what I said, I'm gonna add counter trend trades to it. Because, Mike, I'm not looking for home runs. Okay. And I thought about it the other day, I'm missing too many opportunities, right? Not FOMO, not worried about missing things, this and that, but I'm like, you gotta understand, when you go through core strategy, they do a Fibonacci basically of 33, 33, 33. So me doing this is more conservative. I'm gonna miss trades, but I got a higher probability of my trades working when they work out the right way, right? So I'm like, and I back tested it, and I was like, I'm gonna hit a 2 to 1. I know I'm gonna hit a 2 to 1 on it. So most of the time. So why not take it? So basically, I'm just going back to traditional. I know they've made changes in core. I know, like when me and Roberto went through core, curve dominated everything, right? If you were low, they would tell you to take counter trends. What does Scott tell you now? Does he tell you to take them? So you got to be with trend, all right? I'm okay, but Eric counter trends, right? So because we're from the old school of it. So if you're low on the curve and you have a downtrend, you buy. If you're high in the curve and you have a downtrend, you sell. If you're high in the curve and you have a sideways trend, you sell. If you're high in the curve and you have an upwards trend, you can still sell.
Okay.
All right? So basically, I've just incorporated counter trend trading, right? But now here's the thing. Every trade you're going to see me post. Now, let me get ready for this. It will start next week. You're going to see me posting more trades, a lot more trades. It's going to open up the floodgates, which I'm excited about. Give me something to do. Stay out.
I found out that on the Forex.
What's that?
You were right. Huh?
Say that again? That fell out.
I said you were right. My counter trending did not work as well as my
And you're taking shorter wins now.
Yes, 2 to 1s.
Now I'm
going with trend though. No, I'm not.
100%. So you know what I would
get as good as you, I wouldn't dare try it though.
And you know what I would say though?
What?
Stay with what you're doing.
Yeah.
And then when you feel a little more confident on the counter trends, if you want to open that up into your toolbox, then bring it in. You know. Tony, you know
I've
what
already
you.
been burned by the counter trends. It's gonna be a while before we get back.
All right, then fair enough. It's psychological, dude. I'm with you.
Okay.
I'm with you. Do what you feels comfortable for you.
You're right, Tony.
I know I'm right. I'm you. There's usually a 99% chance I'm right. Okay? And if I'm not right, all right, in that particular situation, it's because I wasn't properly informed. That's a joke.
Is the money back guaranteed?
It's a joke, but it's really not a joke. If you know, all right. All right. No. No, this is good because I like what he said because Tone had a lot of trouble with a lot of these trades, and it was like I kept telling him, I was like, dude, you're up. Pull money off the table. Pull money off the table. So, real quick, a couple of you asked me about the 1-to-1. If I'm giving you these 2-to-1 trades, and you still want to do that 1-to-1 and move the stop loss up, go ahead. I'm not telling you not to do it. I'm just not doing it. But I'm not telling you it's bad. I've done it for years. It's great. I just don't want to manage my trades anymore. I don't. That's why. All right? And the thing about it is, as much as I can't stand him, the guy Sam that was here, you got, or actually I won't use Sam, I'll use Jeff, because I can somewhat stand Jeff. Yeah. You gotta trust supply and demand, and you gotta trust your trade plan, and you gotta trust your overall being, right? So when we missed that oil trade by 9 ticks, and everyone, I didn't even ask it, I didn't care. I didn't care. I felt good. I was like, I was right. That was the right trade. I missed it by an inch, by a hair, but I was right. So that validated that for me, right? And I'm okay with that. It's about doing this correctly. All right. So in this trade, all right, we're buying. We're middle of the curve, upwards trend. Now in Forex, all right, we're talking currencies right now. We're gonna go down to the daily time frame. Okay. Now in Forex, obviously we're in this trade right now because it just came in here. Okay. I need a fresh daily zone, which this was at that time. Okay. Drop base rally. I need a fresh daily zone. Then I mark it up, proximal distal, right? Then I dial down. I go into my 4 hours, right? I start grinding, right? Why do I grind? To get a better risk to reward ratio, right? So I can get a bigger target, right, per thing. It really doesn't matter for me because I'm doing a 2 to 1, but I still want. It does matter because if I can make that entry shorter, my 2 to 1 will be easier to get. Does that make sense to everybody? It will be a lot easier. Now, I also need a zone inside of a zone. All right? So that daily zone, which I do. I have a drop base rally right here. Okay? So it's called zone correlation. The whole thing configures, in FX, the whole thing configures from the daily zone. I need a fresh zone that has the exact pattern on it, okay? And that's what I'm looking for. Now with that, all right, now say I don't like what I see, I'll go down to a 180, a 120, a 90, and a 60. Then I'm done. In FX, there is no reason to go below an hour chart. There's no point of it. I'm telling you right now, you're just gonna burn yourself. It's just guessing, it's gambling. That's for futures. We go down to 15-minute charts and futures. All right? Now, the correlation of how I pick these has to do with the stop and the entry. Basically, I just need to cover the zone and I need to cover the numbers that it's around. All right? So, you know, the whole number thing is the institutional and psychological numbers that I use, right? I'm gonna have to go over that more in depth one of these days and teach that in detail, okay? But I'm not gonna do that right now because I want to do the other 2 asset classes quickly, all right? So with that, like you guys all know, I like to buy and sell on 20s, 30s, 70s, and 80s. Those are sweet spot. Those are sweet numbers. Or major institutional numbers like 500, 250, 1,000, right? So basically, I try to find a zone that's in correlation with those numbers. But think about how powerful that is. If there's a demand zone or a supply zone on one of those numbers, what does that kind of validate for the numbers? That banks and institutions are buying on those numbers, all right? This is the stuff that David Warner taught, okay? All right? These things. So now I said 93.30, so I'm 5 pips in front, so obviously I just front run it, right? 93.35. Right here, I'm just covering the penny, 92.85. And here's the beauty of it. I can stop now. That's my entry, that's my stop, and that's my target. I'm done. I'm done. See you later. It either stops me out or I'm in. I'm done. Whatever. All right? Now, some of you are going to say, what if a big news announcement comes out? Situation does dictate. There would be, for example, that oil trade I pulled off that was like 6 ticks from the target the other day, that was a little early. Yeah, I'm no dummy. It hit that level like 5 times and it couldn't get to that target. I'm going to pull that off when it's that close to it, so I closed that trade. But basically, for the most part, you shouldn't have to worry. If you're going to trade like this, you shouldn't have to worry about, you shouldn't have to worry about news or things like that because a 2 to 1 is a day trade to a quick swing trade in every asset class. In futures, the 2 to 1 usually goes off within the day, you know? All right? So basically, here's the beauty of it. All I got to do now is just, now here's the thing. Everything stays the same for futures and options. Just the only things that change, for options, it's exactly the same. All right, it's exactly the same. For futures, picking the zones are a little bit different because, and it's not that complicated, but let's just, I'm only going to do the I'm only going to do the spider because that is just what I was trading with Marsha over there, all right, and I think I've got it, yeah, so basically look it, nothing changes. Monthly, weekly, daily, all those things come into accordance, all right? I like this daily zone down here. Me and Eric were looking at this yesterday, all right? At 405.05 and then 399.95 from the daily, all right? So basically, and then Marsha, what was the target? 415?
415.99 was the target. 415.05 was the target. Sorry.
What the fuck? Oh, there it is. $415.05.
415.05 was the target.
Okay. Now for now, with options, so basically, we're right here, entry, stop, target. It's a 2-to-1, okay? I will say this though, and me and Eric were talking late last night. I'm open to making this the only asset that I'll let run longer than a 2-to-1 because of how it works. Futures and Forex, no, I'm all set. I'm in and I'm out. But options, especially when you're in a bull market and you're letting it ride, I'm cutting myself short by doing that. This one in particular, I just did a 2-to-1 just to set it up, okay? So this strategy, the way that I'm doing now, obviously I'm not getting into the pricing of the options and all that, all right? You've got, Psycho over here to do that with you, okay? But obviously all that comes into play too, pricing out the option, the expiration date. For something like this, because that's what me and Eric were talking about yesterday, you know how we always like to try to go 100 days or more on a swing trade. I only did a 45-day expiration date on this because it's a 2-to-1, right? The target's not that much, so I'm not going to pay more for something that's priced out, further out. So, but what I'm getting at, I'm not worried. I'm not going to get into the into pricing out the option and everything because I mean I could if I wanted to, but he that's what he does, and he does that with you. I'm just I'm showing you that the strategy that I've finally put together can complete all three assets. And the last one we'll go to is futures.
Hey, hold on, before you click that one.
Yeah.
I'm blind. 405.
05.
That's your
That's the entry. The stop is 399.95. 05. Yep.
Thank you.
Exactly a 2-to-1. And let's go, last one, let's go to crude. All right. All right, so monthly, weekly, daily. I hate how it does this. The first legitimate zone, supply zone on here is right here, right?
Yes.
And it's been poked, but whatever. Let's just call it legitimate supply zone. What I'm telling you is, if you want to be active in this, and you trade like that, you're not going to have a lot of opportunity. This ain't options and Forex. You got to grind out. But what's my odds enhancer, right? Like, look at this right here. Let me show you an example.
Stand to the other side.
Like, for example, okay? Like, that's not a zone right there. But if we dived into that, what would it have turned into?
It's a zone.
A zone, right? So in this market, that's the only change that I'm making. So basically, think of it this way. You want me to simplify it? If we're bearish, you want to look into some red parts, the red bodies and the wicks of the candles. If you're bullish, green in the candles. That's it. That's simple. From a daily, go down to a 4-hour. Now we start talking. You motherfucker.
Whoa.
I wouldn't have got back in it because it wouldn't have. So the trade that I play, it wouldn't. No, because I don't chase it. No, it's all right. That's news. That's news driven. What do you want to do? That's a 4-hour chart. That's a big move. It's okay. It's all right. It worked.
The W,
What's that?
hourly, little demand, hourly W.
So this isn't. I'll show you where I placed the trade. But this was my entry. This was my stop, and this was my target. I think the zone that I pulled from was on a 15-minute time frame. So basically, what I would do here. Check this out. What I would do here is just like Forex. I would start dialing down 180, 120, 90, 60. Then from 60, I could go 45, 30, 15, and I would stop at a 5. I'm pretty sure I found this zone on a 5. Let me see. Yep. So I started it right here, okay, and it looked good. This was the entry. So this morning when we poked, I mean, look it poked it and it came right back down. We nailed it. We had a crazy morning of news. What are you gonna do? You know, what are you gonna do? Now it just would have hit my target. There we go. And it is what it is. You know, no harm, no foul. All right. The reason what now? Here's the other thing that I go into with all this. My stop was my stop had to have been higher than that. It wasn't. It wasn't. That doesn't matter anyways. The same thing with the stop. I want to clear that shelf, right, wherever it is in that particular area of that region of where the zones are, and I want to protect psychological numbers. Psychological numbers in oil work just as good as they do in currency. No questions. I'm surprised I didn't put my stop at 77.60, but realistically I'm glad I didn't because it still would have stopped me out. So, but I'm not chasing and now another thing, right, a side note. On Fridays, I'm not looking for, I've said this before, I've said this for years, I'm not looking for more trades right now. I'm done. My week's over. I know y'all are giddy and y'all want to place trades and shit. I'm done. My market analysis for the week is done. Like Saturdays can't come soon enough. You'll get to that point someday. You'll be like, man, good the market's not open. I can do something else. Alright? But that's it. I'm really excited about this because it's really, like, look, I don't come up here and teach futures and options because I'm not active in it that much, but if I'm active, I'm going to teach it. I trade futures and options successfully. I just don't talk about it because it's not my main cup of tea or whatever, right? Like, so, you know, the reason why I've always pulled away from futures and options is because it was time consuming. But I figured out a way now not to make it as time consuming. So I don't give it, this is easy. I've got this down. I'm big about my time. Like I'm the trader that made it, right? And now I'm, you know, in other areas of my life, right? So that's what it is. This works. And you know what I can say? You know how I always tell you what I do works, it might just not be sexy. This isn't actually, this is kind of sexy. It's like Greg on a somewhat good day, right? If Greg was here. Where is Greg?
Probably didn't come out.
Fuck Greg.
Cold.
Too cold.
He's weak, man. Someone text Greg. Tell me he's weak. This right here, you're gonna start to see. I'm gonna have a lot of trades going. There'll be a lot of these. Boom, 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 boom. Between SPX, the SPY. I'll probably stop doing the SPY. SPX or even the SPY. All the currency pairs, oil. And now that there's counter trend trades coming in, you're constantly gonna have action. Constantly. You're gonna have more action from me. I will be more active.
Starting Sunday and Monday, can you start doing my trade debate if I sit down with you today and open up?
Sit down with me on Wednesday, just because I'm backed up on work so I'll do it. I'm game.
Anthony, can you repeat what you said about the psychological numbers?
All right, so it's a good point. Well, this is what I'm gonna do. Next Wednesday, my teaching session will be psychological numbers because all right. So there's one book. Because this is what I want you to do. I want you to get I'll explain it briefly, but I want you to get the concept of it, right? And then I'll teach you, because I do it a specific way. So basically what the psychological numbers are is banks in it, like me and you, are going to pinpoint to a chart and say we're going to buy at this exact number. Banks and institutions don't do that. They just slap down a stack of orders on major whole numbers, you know, like $5, $10, $15, and they buy at these certain big pricing points. And to validate that, to show that that's accurate, all we have to do is go to the charts and we see supply and demand zones forming on those numbers, right? So there's a book, and you can get the free PDF, but here's the thing. It's called The Quarters Theory. It's for Forex, but I don't want you to use the strategy that he teaches in the book, because I don't like the strategy. I think the strategy's stupid. But it explains, it talks about a lot of the numbers. You could do that as a quick overview. Next Wednesday, I'll teach psychological numbers, okay? Because they work across the board. The quarters theory. But I do not want you doing the strategy. I just want you basically, he's going to give you he's going to give you numbers, all right? And a lot of those numbers are similar to mine. But the way that I do it is a little more, I do it the way that David Warner, who's no longer an instructor here does it, okay? So, I will definitely go over that. I will teach that on Wednesday. That will be my Wednesday class. No question, all right? Because if I'm going to be up here teaching, I can't skip past that, because the numbers are a big factor, because I do make a lot of buying and selling decisions based off of are the numbers where the zones are and where my stops are put. So I will do psychological numbers on Wednesday, all right? So if you're here right now and I told you I'm doing it and you're not here on Wednesday, don't ask me to do it again. No, I'm joking. I'm joking. What else? Any other questions?